Hello everyone, I'm Aaron Blake. In just a matter of minutes, more than $3 trillion was wiped out from the gold and silver markets, stunning investors and traders around the world. Prices that had climbed to record highs only recently suddenly collapsed with extraordinary speed. The scale of the losses, the suddenness of the move, and the confusion that followed made this a moment that immediately demanded attention. This situation matters right now because it revealed how quickly confidence can evaporate, even in markets long considered safe and reliable. Before we go further, subscribe right now because what you're about to hear explains a shift most people still haven't noticed. Now let me take you carefully through what the article reports, step by step, without adding or changing any facts. According to the article, more than $3 trillion was wiped out from gold and silver in minutes. This sudden drop shocked investors worldwide. Gold and silver prices had reached record highs in recent weeks, attracting strong interest from investors searching for safety amid rising geopolitical and economic pressures. Then, in an extremely short period of time, prices reversed direction and fell sharply. Gold prices fell more than 5% in a short time. Silver prices dropped even more dramatically, falling over 8%. These declines happened rapidly, leaving many investors unable to react before losses mounted. Traders reported swift and heavy losses as prices moved lower. Almost immediately, social media began to fill with reactions from investors trying to process what they were witnessing in real time. One social media user noted that $2.5 trillion had been wiped out in just 30 minutes, comparing that figure to the entire market capitalization of cryptocurrency. Another user described the move as complete manipulation. These comments reflected the shock, anger, and disbelief felt by many investors as prices collapsed. The article states that the scale of the wipeout drew global attention and intensified debate about whether the move was natural or something more concerning. This development came after a strong rally in precious metals. According to the article, gold and silver had reached record highs in recent weeks. Analysts cited in the article said the sudden drop was caused by profit-taking, speculative trading, and global uncertainty. Let me explain what this means in practical terms. When prices rise rapidly, many investors decide to sell in order to secure profits. When large numbers of investors do this at the same time, prices can fall sharply. Speculative trading can intensify these moves, especially when markets are already volatile. What stands out here is not just the size of the losses, but the speed at which they occurred. The article emphasizes that more than $3 trillion was wiped out in minutes. That pace raised serious concerns among investors. Many questioned whether such a dramatic move could happen naturally or whether it suggested some form of coordinated activity. The article reports that some investors questioned whether the sharp drop represented complete manipulation. Social media played a major role in highlighting the magnitude of the event. Posts described the move as the largest liquidity swing in history. While these statements captured investor sentiment, the article notes that experts said rapid price swings can occur for several reasons. These include profit-taking, speculative trading, or coordinated actions by large investors. Importantly, the article makes clear that there was no official confirmation of manipulation. Here's what the data in the article shows clearly. Gold prices fell more than 5% after reaching recent record highs. Silver prices dropped over 8% in a very short period of time. These moves happened quickly and almost simultaneously. In addition to gold and silver, other metals also experienced declines. Copper and nickel prices fell as well, indicating that the move extended beyond just precious metals. Analysts quoted in the article said that the rapid gains in precious metals needed to stabilize. Kathleen Brooks from the XTB Trading Group said the rally ended because prices had risen too far too quickly. This statement reflects the explanation presented in the article that markets sometimes pull back sharply after extreme upward moves. The article presents this view without adding any speculation or interpretation beyond what is stated. The article also highlights broader factors contributing to market volatility. Geopolitical tensions are mentioned as one source of uncertainty affecting investor behavior. Federal Reserve decisions are also cited as contributing to market instability. In addition, increasing demand from crypto investors and exchange-traded funds added to volatility. Together, these elements created conditions in which sharp price swings became more likely. Let me explain why market structure matters in this situation. According to the article, silver, platinum, and palladium markets are relatively small compared to other asset classes. Because of their smaller size, these markets are more vulnerable to sudden inflows or outflows of capital. When large investors move quickly, prices can change dramatically in a very short time. This vulnerability helps explain why silver experienced such a steep and rapid decline. As prices continued to fall, the sheer magnitude of the wipeout became the central focus. According to the article, more than $3 trillion was erased from gold and silver in minutes. Investors around the world watched as values collapsed. Many reported losses almost immediately. Comparisons to the total market capitalization of cryptocurrency underscored just how massive the move was and why it captured global attention. It's important to pause here and clarify a key point mentioned in the article. Gold and silver are often viewed as safe haven assets. Investors typically turn to them during periods of uncertainty. The article states that prices had been rising as global investors intensified their search for safety amid mounting geopolitical and economic pressures. This context makes the sudden collapse even more striking. Assets perceived as stable experienced extreme volatility in a very short time. The article also explains that the scale of the wipeout raised questions about sustainability. Such rapid price swings highlighted the vulnerability of precious metals markets. According to the report, these extreme movements force investors to question whether such markets can handle sudden shifts in sentiment and demand without severe consequences. Another major factor discussed in the article is speculative trading. Heavy speculative activity can magnify both gains and losses. When markets are crowded with speculative positions, even a small trigger can lead to a cascade of selling. The article attributes part of the sudden decline to speculative trading, alongside profit-taking and global uncertainty. The question of manipulation remains central to the discussion. Some investors and commentators described the move as complete manipulation. However, the article clearly states that there was no official confirmation of manipulation. Experts cited in the article explained that rapid price swings can occur naturally under certain conditions. Coordinated actions by large investors were mentioned as a possibility but not confirmed. Gold and silver were not the only markets affected. Copper and nickel prices also declined during the same period. This broader downturn suggests a wider adjustment across metals markets rather than an isolated incident. Analysts said the rapid gains had to stabilize, reinforcing the view that prices had moved too far too quickly. Now let me explain why this event matters, based strictly on what the article reports. This wipeout demonstrated how quickly market conditions can change. In just minutes, trillions of dollars in value disappeared from assets that many investors rely on for stability. The article shows that even long-established markets are vulnerable to sudden and severe volatility. For investors, the article highlights the risks associated with rapid price increases. Strong rallies can create confidence, but they also increase the risk of sharp reversals. The wipeout described in the article serves as a reminder that gains can disappear just as quickly as they appear, particularly in volatile markets. The article also emphasizes the role of uncertainty. Geopolitical tensions, central bank decisions, and shifting investor behavior all contributed to the environment in which this dramatic move occurred. The article does not predict what will happen next, but it clearly outlines the factors present at the time of the decline. Another important takeaway from the article is the role of perception and reaction. Social media amplified the shock, spreading reactions instantly around the world. Investors shared losses, made comparisons, and questioned whether the move was fair. These reactions reflect the emotional impact of the event, even as experts pointed to known market dynamics. The article also highlights the interconnected nature of modern markets. Demand from crypto investors and ETFs was mentioned as adding to volatility. This shows how capital can move rapidly between asset classes, increasing the speed and scale of price movements. As we move toward the resolution, let's clearly summarize what the article confirms. More than $3 trillion was wiped out from gold and silver in minutes. Gold prices fell more than 5%. Silver prices dropped over 8%. These declines followed record highs reached in recent weeks. Analysts attributed the drop to profit-taking, speculative trading, and global uncertainty. Some investors questioned whether manipulation was involved, but no official confirmation was reported. Experts said smaller metals markets are more vulnerable to sudden shifts. Copper and nickel also declined, and one analyst stated that prices had risen too far too quickly. This situation is important because it revealed how exposed even traditional markets can be to sudden shocks. It highlighted the impact of volatility, speculation, and uncertainty. It also raised serious questions about how sustainable rapid price increases can be in precious metals markets. Thanks for watching. Subscribe, share this video, and stay alert, because what's happening right now matters more than most people realize.